I'm Owen Bigland. This is the Inside Edge video blog. I received an email from a viewer who had bought my book last month, had read it, said he really enjoyed the book a lot, had learned a lot of things. One of the nicest things he had said was that he had kind of changed his thinking on how to look at investing and focus on the long term. He had told me that he doesn't live in Vancouver, but he had been watching my blogs for several years now, bought my book as well, and had just bought his first condo, a small one-bedroom just outside Toronto, and how things have changed for him. He thinks differently now than what he was thinking several years ago. He told me in the past he was always kind of negative, thought everything was maybe overpriced, we were due for a correction. He said after watching my videos for several years, he started to develop more of that investor mindset, and that, you know, the best time to buy your principal residence was yesterday, the next best time is today, provided you need a roof over your head that you can hold it. And it took him a couple of years of watching my blog before he finally kind of got that through. And now he says for the last 3 months, you know, I just look at things differently. Now I'm on a positive side of things. Sure, I want to see my home now increase in value, but he knows that markets go up and down in the short term. But, you know, it's interesting because I can tell you that when you go through life, and I see this so many times with people who are negative towards things, they think the stock market's overpriced. They think Vancouver real estate is overpriced. It's all in a bubble and it's going to crash. I don't think these people know what it's doing to their mental psyche and just their overall outlook. It's drifting into other things in their life when you have that negative attitude. I'm going to harp on it too long here. I talk a lot about it in my book. It starts with your mental attitude. Warren Buffett would always say, I've never met anyone in my life who achieved any type of success unless they had a positive attitude. And you have to have that. But this guy had told me how, you know, his outlook on things have changed a lot more now. Instead of being negative and everything's negative, now that he owns a home, he's positive on things. And you have to leave the dark side and come over to the light is what I'll call it here. Now, on another topic, he sent me an email and he goes, Owen, I know you talked about a few mistakes you had made, which I do talk a little bit of on my book, a couple of things that I did wrong. Nobody's perfect, and I'm under the belief that if you're not making mistakes, you're not working hard enough. But the important thing is you want to learn from your mistakes. But he asked me, what are some other, I know you brushed on a few, but what are some of the things, some mistakes you made over the last 25 or 30 years? So I thought it was a good question, so I wrote down a few. A few of them I kind of brush on my book, but a lot of people haven't read my book. I'm not perfect. I've made some mistakes in real estate and investing. So I'm going to go through them. Maybe you can learn a few things from the mistakes that I made over the years. But I can tell you, I did learn from them. Each one was a lesson for me that I didn't repeat again, and that's the important thing. So one of the main ones I talk about in my book is being penny wise, pound foolish. I had a deal about 10 years ago to buy what's called a hard loft. It was a raw loft in Gastown. At that time, the market was good, but it was somewhat balanced. So it wasn't like the market we have now with bidding wars. You could put an offer in and below asking and negotiate it from there. Now, this was a special unit. It was a hard loft in an old restored building in Gastown. The special thing about this unit, the cool thing was it had a lot of exposed brick and beam, but this was special in that this particular unit, when they reconfigured the building, contained a large vault, a safe, encased in cement with a metal door. And the cool thing about this unit was that was where they converted or put the bathroom, was built into this huge walk-in vault. Now, I liked the unit a lot. This was an investment unit for me. We went back and forth. The negotiating went back and forth a fair bit. This was, at the time, about a $450,000 unit. We could not get to a price. We ended up getting about $7,500, $8,000 apart on price. We were much further apart. And for whatever reason, I let maybe my ego, my negotiating prowess get in the way, and I walked away from the deal over about a $7,000 or $8,000 difference. Now, looking back on that 5-6 months later, I realized that I should have just bought that unit, paid the $7,000 more. I thought at the time it was too much. I should have bought it. It was a special unit. I ended up buying another unit in the neighborhood, which I still own today and has turned out very well for me. But I still, I'm kicking myself that I did not buy that first unit and just ponied up the $7,000. So again, penny wise, pound foolish. When you buy like I buy it, rent it, put a tenant in there for 20 or 25 years. Trust me, that $7,000 you think you overpaid is going to be peanuts, and it's not going to make any difference, especially when it's kind of a one-of-a-kind special unit. So I should have bought it. Some of the other mistakes I've made, which are very common, and everyone has fallen into this. When I first started investing in the stock market, I was buying high-priced, expensive mutual funds through the bank and through a broker who was selling me these. And it was funny, I owned these probably for 5 or 6 years before I finally smartened up, because we were going through some nice bull runs here in the S&P and the TSX. Yet I would get my monthly statements every month and I wasn't really gaining all that much. It wasn't until I started learning about this stuff, what these management expense ratios of 2 and 3% were doing to my portfolio. And I talk about that in my book. A 2% management expense ratio doesn't sound like much, 2% to manage the mutual fund. It's devastating when you look at it over 10, 15, 20 years, what it does to your returns. If you're putting away $1,000 a month into a mutual fund, managed mutual fund, at a 2% MER, over the next 30 years, that's going to take out about $250,000 out of your pocket, as opposed to if you would have just put it into a low-priced index fund. And as we all know, and I talk about in my book, most of these managed mutual funds can't beat the index they're trying to chase. So why are you paying them 2%? So that was one of a critical mistake I made that went on for about 4 or 5 years. Luckily, I know there's people that have been putting into managed mutual funds for 20 and 30 years that still haven't caught on. So that was a mistake I made early, but thankfully I caught it after about 4 or 5 years. The other thing that I also brush on a little bit in my book is I was taking in my younger years advice from people that I should not have been listening to. Now, it was a little easier back 15 or 20 years ago getting bad advice, because people had to go on to CNBC or onto the business network, or they were on the radio or in the newspaper. Some of the bad advice I was just taking from people that I knew from the gym or whatever. It wasn't until later on in life that I realized that I should really be filtering out who I'm listening to. The people that I should be getting advice from should have transparency, and they should also be walking the walk and talking the talk. In other words, if I want to learn about how to make money in real estate, I don't want to be taking advice from someone who doesn't own real estate and is not a multimillionaire already. So otherwise, why are you taking the advice of this person? They're not successful. How are they going to advise you on how to be successful? Same thing in the stocks. I was taking advice from traders. Luckily, I snapped out of this pretty early, and I started to develop a bit of a mastermind group and started focusing and listening to people who had success. And this is so important today, way more important today than it was 15 or 20 years ago for me. As I say, at least back then, the people had to show their face, the bad advice. Nowadays, these people, these anonymous bloggers, these Twitter followers, these analysts, they can hide behind monikers and all kinds of things. Nobody has any transparency. Some of the stuff I see on YouTube, I've blogged about this before. Some of the people that are on YouTube and doing blogs on Vancouver real estate and on investing it's just criminal what some of the stuff these guys are throwing out. People should avoid some of these anonymous bloggers and some of these YouTube channels and focus on the people that have transparency. I'd like to think I do. I've been in this business 30 years. Both as a real estate investor and a stock investor. The philosophies I've always preached here are nothing fancy. It's a basic buy and hold strategy. You can't time markets. Buy it, hold it, keep it, and you will do fantastic. I give you the blueprint in my book here to follow. So I've got transparency. I've done it. I've created and attained success financially. But some of the advice that people take, and they'll comment on my YouTube blog about, oh, I saw this guy here, he's telling me this, and you're telling me that. Well, who is this guy? What is his background? What does he do? Has he achieved any type of financial success? Is he a real estate investor? Chances are he's not. Many of these people are just angry. It's really what I would call just propaganda, is what a lot of these people are putting out. It's propaganda. They have some sort of ulterior motive that they need this market to correct 20 or 30%, and then maybe, although I doubt it, maybe they'll be able to buy in and buy a condo finally and get out of renting for life. But I highly doubt it. So those are a few of the things that you can maybe take from mistakes I've made over the years. And again, everyone makes mistakes. I'm under the belief that if you're not making some mistakes, you're probably not trying hard enough, and you're not experimenting and putting in the time. But the secret is that you learn from these mistakes, and I talk about some of them in my book as well. Hopefully you guys can learn from some of the mistakes I've made over the years as well. As always, I'm Owen Bigland. Thanks for watching. I'll see you next time.